Hello aspirants. So in this video we are going to discuss about GST 2.0, that is the upgraded version of goods and services tax which have been introduced 2017. So coming to GST 2.0, this has to be understood in the backdrop or background of the reform agenda that has been ongoing by the government of India. If you could recollect the present year's budget as well as economic survey, so the finance minister was very much particular about the reforms that has to be taken in our financial sector as India is progressing towards becoming the $5 trillion economy. The reforms in the financial sector are of different types, especially if you consider the tax reforms, both in the direct tax as well as indirect tax. They play a very much important role in India's journey towards becoming a $5 trillion economy and beyond. So coming to our point of discussion today, it is the tax reforms in the GST or the indirect taxes arena. So coming to GST 2.0, we'll try to understand what exactly is on agenda. So why we need this upgraded GST or the next stage in the evolution of GST. To begin with, as we all know, GST, the goods and services taxes, have been introduced on 1st of July 2017 by constitutional amendment. So it has subsumed multiple indirect taxes. As you can see on the board, there are multiple indirect taxes starting from entertainment, excise, VAT, octroi, and many more taxes. So these taxes have been subsumed into a single uniform tax. Now, the main agenda is simplification of India's indirect tax structure. So, in line with international or global best practices, India as an emerging economy was in need of a simple tax which doesn't have the issues of cascading. Cascading means tax on tax. And also they want to upgrade it with technology. That is technology infused tax system. So keeping all these things in mind, GST has been introduced. It has been 8 years since the introduction of GST. Now the main agenda here is we have been having mainly a four-fold or four-tier taxation system. With respect to GST in India has been majorly comprised of 4 slabs: 5%, 12%, 18% and 28%. Of course, there are certain other categories, but these 4 are the major taxation slabs. Now, the agenda is making it simplified. In advanced economies, if you observe, there will be 1 or 2 slabs at max. So, we are traveling towards a complex multi-fold or multi-tier taxation system to simpler form of taxation system. Now, essentially what we are trying to do, we are trying to simplify the number of tax slabs. For instance, we are taking away or doing away with 12 and 28. So, all the items that are presently included in the 12% tax slabs, majority of them, I mean to say, whole lot of them, close to 99% of the tax items will be brought into 5% tax slab. And in the case of 28%, almost 90% of them will be brought into 18%. Here, in 12% tax slabs, 99% of the items will be shifted to 5%. So essentially, we'll be having a majorly a two-fold taxation system with 5% as well as 18%. Of course, there will be one more slab, that is 40%, which is majorly comprised of 5 to 7 items. Those are luxury or sin items. So if you look at what are the key changes that are being proposed with GST 2.0, if we come one by one, the first aspect that we have discussed, from a 4-tier taxation system to 2-tier taxation system, that is the first major aspect. And also the elimination, just now we have discussed, from 12%, majority of them will be shifted, 99% of them will be shifted towards 5% tax slab. Same is the case with 28%. 90% of the items that are existing in 28% tax slab will be shifted towards lower tax slab, that is 18%. Now coming to the other aspect, that is ease and tech friendliness or tech savviness with respect to our taxation system. So there will be some features like pre-filled returns or pre-populated returns, faster refunds. Right now the refunds, GST refunds, are taking a significant amount of time. So this significant amount of time will negatively impact smaller businesses. I mean to say our MSMEs especially. So the refunds will be much faster, and also automated ITC. ITC is your input tax credit. I think most of you are aware about the input tax credit. In the input tax credit, the manufacturers will be utilizing the tax already that has been paid on their inputs to offset or minimize the total amount of tax that they have to pay as a part of GST. I think most of you are aware of it. Coming to the next major subcomponent is the likely impact that GST 2.0 is going to create on several areas and stakeholders. If you go one by one briefly, on businesses, just now we have seen the ease of compliance will be increased a bit. Next, right now, because of multiple tax slabs, there have been several disputes and litigations because of the classification. I think most of you remember about some of the famous controversies about the popcorn, normal popcorn, flavored or caramelized popcorn issue. Also, the issue about the normal bun and bun with malai. So, all these issues, reclassification issues, will be brought down, and the litigation will be brought down drastically because of lesser number of tax slabs. Also, there will be improved cash flow as well as the working capital and cost rationalization, because if you take some of the industries like cement industry and infrastructure industry, if majority of the items that are existing in the higher tax slabs like 12% and 28%, if they are brought down to lesser tax slabs, there will be more inflow of funds. So that is the main impact on the businesses. So we can say on businesses it is going to have a very positive impact. Next, coming to the general consumption and economy, it will definitely boost consumption because lesser the tax rates, lesser the effective tax rates because of rate rationalization will significantly boost the consumption. And also GDP growth, according to the current estimates, close to 50 to 70 basis points of GDP growth can be triggered with this GST 2.0. And also there will be reduced inflationary pressures. You all know what is inflationary pressure, the pressure due to cost of goods and services. Definitely with the reduced cost, the inflation will be brought down. So in the next aspect, if you try to observe the impact of GST 2.0 on the government revenue, so in the short term, there will definitely be an initial dip, but in the long term, there will be an increased tax compliance. Because of the much higher tax compliance, there will be definitely long-term gain. And also, if we consider the fiscal manageability means if we look at the rate rationalization, majority of the items will be brought down to lower tax slabs. That means there will be significant amount of revenue shortfall immediately. So, can we fiscally manage the situation? But yeah, looking at this, the reports clearly state that majority of the items, 75 to 76% of the items will not suffer any significant shortfall of the revenue. So going by the estimates or reports, it is fiscally manageable. Definitely there will be some effect, but in the interest of long-term efficiency and effectiveness of our taxation system and as well as the growth of our economy, that is much more necessary. And also there will be more buoyancy of taxes, indirect taxes especially. So this will be largely the impact on the revenue of the government. And the last aspect which we have decided to discuss is the market confidence, how the market is reacting for this GST 2.0. Seems like a very big reform after the introduction of GST. So if you look at the newspaper reports, all the major markets have responded positively. Even if you take Nifty's 50, it has surpassed the 25,000 mark. Even the Sensex has gained close to 1,000 points, I believe. So yeah, the markets in total, they have responded very much positively. To sum it up, if you try to understand the main intention behind GST 2.0 or the second generation of GST reforms, first and foremost, it is simplification of the tax regime from mainly a four tax slabs to majorly 2 tax slabs. And second and most important is to push or give a boost to the consumption. By reducing the cost or by reducing the effective rates, the consumption can be boosted, both the public as well as private consumption most importantly. And Last but not least, enhancing the ease of doing business. We have seen the kind of reforms, tech enabled reforms that are intended. So these three would be the major area of focus. We can expect a very positive externalities with respect to our entire economy. Last but not the least, as a part of our initiative UPSC angle, we'll try to discuss the kind of questions or the areas that has to be focused both in our UPSC mains examination as well as prelims examination. As you all know, GST is one of the important area where questions have been repeatedly asked both in UPSC mains examination as well as our preliminary examination. If you look at the mains component, definitely in paper 2 as well as paper 3, there is more likelihood of occurrence of questions. If you take paper 2, one of the standard area is the governance issues, because GST is also closely linked with the governance issue, and most importantly is the fiscal federalism angle. Here, whenever there is an issue of GST, it is one of the major dimension that has been repeatedly invoked and questions have been asked in UPSC mains, the fiscal federalism angle. Now, coming explicitly to GST 2.0, the main question here one has to ask is how is it likely to impact the federal angle? So, if we try to understand, since the rate rationalization involves a significant amount of changes with respect to the slabs, so the states are definitely having some sort of apprehensions. The main apprehension is, with that much amount of reshuffling, will there be any shock or the sudden decrease in amount of the revenue in GST? Because GST is the main and most important source of revenue for the states. For center also it is a significant component of revenue, but for center there are many other sources of revenue, but for state it is the major source of revenue. So that is one important angle. Next, coming to paper 3, these are the important areas where questions can be asked. So the first and foremost is from the dimension of tax reforms and fiscal policy. So GST is a part of wider agenda of our reforms, especially the financial sector reforms. If we go one step below, within the financial sector reforms, we are talking about tax reforms. Even in tax reforms, we'll be talking about direct tax reforms and indirect tax reforms. Direct tax reforms will be discussing in a further separate video, because most of you I think would be aware about the new income tax act that has been discussed and brought in. Second and most important dimension is the impact analysis. We have clearly outlined the major impact. And third most likely dimension would be challenges and associated way forward or solutions that you can prescribe. So these are the areas that you need to cover with respect to mains. Now coming to the next important aspect is our preliminary examination. If you look at the previous trends with respect to GST, many questions have already been asked. So the questions were touching different areas. Since there will be multiple statement questions, facts and figures might feature basic concepts related to GST, institutional bodies. So mention should be made about GST Council, which is a constitutional body under Article 279A, and also impact on specific items and sectors. That could be an analytical bent of question, and impact on other stakeholders. So these are the likely areas or dimensions that has to be focused with respect to prelims. Now we'll try to have a look at some sample questions on the discussion we have had just now. So consider the following statements with reference to GST and its proposed reforms, that is GST 2.0. So the first statement says GST is a destination-based tax that subsumes indirect tax like VAT, excise, and octroi. The second statement reads GST Council is chaired by Prime Minister and its decisions are binding on all states. The third one says the 2025 reform proposal aims to rationalize GST into 3 main slabs, replacing the existing multiple slab structure. Fourth, ITC or input tax credit under the GST allows businesses to reduce tax liability by claiming credit for taxes already paid on inputs. Please type your answer in the comment box below, and also try and write answers and practice answer writing on these questions as we have discussed already. Thank you. Keep following UPSC angle from R.C.Reddy IAS Study Center.